Joining us now is Peter McGuire, CEO, XM Australia. Peter, hi. Thank you so much for joining us. First of all, on China, because that really is the latest news and we've seen that rate cut come in for 10 basis points. How are you reading it and what's your sense on the impact on prices?
Well, good afternoon, Manisha. I mean, it's probably hit everyone between the eyes a little bit. We were expecting possibly a little bit more as far as stimulus and to try and get some traction. And I think it's a wait and see approach, what impact that has to naturally the domestic market in China, the property sector, and how it all moves forward over the next couple of weeks, whether we see an additional cut or other stimulus measures that come to be, rolled out to try and get some traction, both internally and then from an export-driven model.
Another number that the street is dabbling with right now is that over the time of next 45 days, we will see a lot of crude coming off markets because of Saudi Arabia and Russia output cuts. Has market factored that in?
Well, I think that's going to be I think that could push prices higher. And the other side, of course, is that we must keep our eyes very much at this time of year, as far as August is the start of the hurricane season. So I noticed that hurricanes are starting to roll through there, and that could be a real impact as far as price sensitivity. And as you said, rig count with Baker Hughes running at 2020 lows of 520.
The other number that I'm also looking at is the number of Saudi Arabia exporting to Asia, which is China and India. That seems to have declined a bit as well. Do we need to read too much into that number?
Well, I think we do. I mean, India consumption is growing. Chinese are still flatlining, but overall, I think global consumption, they're saying it's going to be around about 103 million, I read from IEA. So there's certainly plenty of push forward as far as mobility and people, getting back after the COVID situation. So I think the demand picture is relatively strong leading up until Christmas. Bit hard to, forecast much further out than there because there's so many moving parts that wrap around the exciting crude market and of course LNG.
Peter, if you look at the last 3 or 4 months, the range that we've seen for crude prices has been between 65 to 85 until now. I mean, we've seen 87 as well. How would you look at this range now moving on for the rest of 2023?
I think we've seen the lowest, Manisha. I don't necessarily think we're going to touch 65 again anytime soon. And where it's looking at the moment is early 80s to mid 80s. And I think it's on an upward push considering all of those factors that you highlighted as far as what's going on with rig count in the States, what's going on with Saudis and Russia. So I think it's overall we'll be probably pushing closer to 90 than 80. And and if you get some shocks that enter the market from seasonality with hurricanes and so on, then that can really push things higher quickly.
So even as we go to 80s and 90s, I mean, as you said, that you don't see demand getting impacted because of that, do you, David? I mean, do you, Peter? Because we've seen prices continue to gain up. We haven't seen demand come down so much. I mean, we've been to 100 and back as well. What's your scene on the demand impact of this?
Well, I don't really necessarily think it's having a huge impact to demand, Manisha. I mean, if it went to 120 to 130, there's certainly a lot of hurt in Main Street as far as inflation and food prices and all the cost of services that are really ratcheting up all across the world. So, and all forms of energy, from electricity rolling across to, gas for heating your home and naturally, running your car on petrol. So, and diesel, and of course. So I think that the overall picture is relatively strong from a demand side. I think it's where it's going to have some issues moving forward will be from supply and producers and how that all plays.
Peter, as we were just discussing before we went into for this interview, that you've been doing karate for 40 years and that takes a lot of discipline into the markets. What kind of discipline do you see coming in when you look at crude as a market? Because it continues to be as volatile. As you said, so many moving pieces of puzzle here, whether it's about US, so much rhetoric coming into the markets as well. So what will move crude prices from here on? What discipline is required for the rest of this year?
The discipline requirement issue has got to be that you don't have any geopolitical shocks. You don't have any weather outages, and they're big points. You don't have any disruptions anywhere, and that's got to be how it all rolls. Because I think there's a lot of fragility as far as supply-demand balance at the moment. And if you tilt one side and it really and a couple of these things could play very quickly as far as weather. Yeah, as you've been in this longer than I, or as long as I should say, that we can see prices really go crazy to the upside, and we don't want that.
Oh, yes, we don't. And I'll wind down with one final question. This one's on dollar index, because that seems to be impacting many of these dollar-denominated commodities. So while we've come back from 99 to 103 plus, what is the range you see this one as well moving on in for rest of this year?
Well, I think the 10-year, the 30-year, I'm keeping a close eye on them, and you've got to be conscious of that. We've got Jay Powell speaking on Friday, and I'm pretty sure that you'll probably see another rate rise this year before the end of the year as far as the inflation story. So I think that the US dollar will be probably 104, 104.50 by, I'd say, within the next week and a bit. So I wouldn't be surprised. I'll take 104 out by next Monday.